Kenyans have the opportunity to submit their views by participating in public hearings on two crucial tax bills proposed by the National Treasury starting tomorrow.
That's right, and as our very own Seth Olala reports, the main focus is on the Tax Laws Amendment Bill 2024 that seeks to raise over 178 billion shillings in additional revenue on the 2024-2025 budget.
Treasury is heavily relying on the Tax Laws Amendment Bill 2024 to raise up to 178 billion shillings to bridge the huge budget deficit occasioned by the withdrawal of the Finance Bill 2024 and finance development projects across the country. The new tax proposals, whose public participation begins Monday in Isiolo and Bungoma, seeks to adjust all the tax categories, including excise, income tax and value-added tax. On Tuesday, the public participation exercise will be held in Mombasa and Siaya before extending to Taita Taveta and Kericho on Wednesday. Under the new proposals, foreign entities that are not resident in Kenya but deriving an income from the Kenyan market will be subjected to a new tax called the Significant Economic Presence Tax that will replace the digital service tax at an effective rate of 6%. The new tax will also affect businesses on digital marketplace such as ride-hailing apps. In taxing the said entities, the National Treasury has proposed that of their turnover derived in Kenya, 10% will be considered as the profit amount for taxation. Travelers seeking air tickets through agents will now be subjected to a 16% proposed VAT. The service is currently exempted from taxation. Entry fees for national parks and reserves that is currently exempted will now have a 16% VAT in the proposed law. In addition, tour operator services that currently enjoy exemption will now undergo a 16% VAT in the new tax proposals. In order to boost agriculture, Treasury intends to exempt pest control products and fertilizers, as well as raw materials contained in fertilizer and pest control that initially were zero-rated, meaning the manufacturers cannot claim tax reliefs for goods sold in the market. In a bid to ease pressure on the payslip, Treasury is proposing to incorporate the housing levy and SHIF as allowable deductions. This means employees will be taxed on income after deductions removed from the gross pay. For example, for an employee earning a gross pay of 50,000 shillings, will have the NSSF, housing levy and SHIF deducted before taxing, meaning he or she will be left with 45,715 shillings. Currently, the taxable pay for an employee earning 50,000 shillings is 47,840 as a result of NSSF being the only allowable deduction. This means, under the new proposal, the employee will save 525 shillings. Under the Tax Procedures Amendment Bill 2024, the tax amnesty program will be extended from June 30th, 2024 to 30th June 2025 should the proposals get the nod and become law. The public hearings for the two bills will be conducted by the National Assembly Finance and Planning Committee from Monday 18th in different parts of the country before the final sittings in Nairobi from 25th November 2024 to Thursday 28th at KICC. Seth Olale, Citizen TV.